dollar américain reste défend une trade.
Fellow traders, welcome to Trade TV. My name is Nicolas Meffet, and I have one passion for options. This month at Xtreme Xpiry for September, let's go see what we have on the economic calendar next week. Okay, on Monday we have industrial production. Tuesday, it's going to be a big one. We have CPI and the FOMC meeting. On Wednesday, housing starts for Augie. And Thursday, we have the leading indicators. Friday is going to be a pretty calm day on expiry day. So let's go check out our weekly Fetish indicators for the VIX. Let's see what's happening on the daily. We can see that we have had a spike for this month, and the VIX is heading towards very, very tough resistance. And it reacted pretty well off those lows. Now, if you follow that vertical line, we can see that as the VIX is heading for that resistance, the S&P is heading for a double bottom, and that bottom must absolutely hold or we're in big trouble. Now, let's go see the Bollinger Bands and the VIX. Again, we have a negative reinforcement. We can clearly see that the VIX is clearly exiting the Bollinger Bands. So this is a very, very good warning for traders to be careful and watch for an impressive rally. Now, let's go see the picture on a monthly basis. Remember, just over a year ago, we defined long-term trading zones for the VIX, and obviously we're still within those boundaries that were defined. So everything is everything is going along to plan. Now let's check out the put-call ratio on a weekly basis. Put-call ratio at this point in time is almost on a perfectly neutral basis. It's very hard to have an interpretation on what is happening based on the put-call ratio. Again, I want to draw your attention to what happened back in April when we had a false signal. The put-call ratio spiked at 1.30, which should have, I did say should have, signaled a rally, but it did not happen. It was a false signal, and back then it was because there was a large skew for index options. So obviously someone knew what he was doing. So again, let's go check out on a daily basis if we see a different picture on the put-call ratio. Here again, it's very inconclusive. It's hovering around this neutral reading, so there's not much we can get as a cue from the put-call ratio for the present moment. Let's go check out the NYSE Intrenals. Now, we are still making higher lows, so we can see that the trend is going upwards for the advanced decline, which is a very good indicator to start with. Now, in terms of new high, new lows, it's starting to point downwards again, but it's not to panic levels, it's back to neutral levels. And the number of stocks on the NYSE that are trading over their 50-day moving average is slightly bending downwards. Again, this is not reason to panic for now. It's not an ideal situation, but obviously it's something to look very carefully, especially if that green indicator spikes lower. Now let's go check out the Dow Theory. Remember back 3 months ago, when the trannies were heading for a double top, they actually gave us a breakout. It turned out to be a false breakout. The trannies pulled back, and obviously the industrial never did confirm this breakout on the trannies, so we do still have this non-confirmation of the industrials, and it's quite problematic going forward. But there's one thing we can say, is that the trannies are still holding along that trend line. That trend line you see in black. So as long as the trannies don't break this trend line, I'm not saying we're safe, but at least we're not going to get in too much trouble. But if you see the trannies breaking this trend line, it could be dangerous for the entire market. So it's something to look out for. Now, the USD, yes, the USD took everyone by surprise, but not for the people here at Jitney, because we've been warning you since last year that the USD could have a big reversal during the summer. Well, we've had it. There's been almost a vacuum. There's been a lot of short covering panic. And right now, the USD, I mean the dollar index, is going to hit a wall. I mean, we're reaching an area, the 80-81 area on the dollar index this is like mega resistance. It's a multi-cycle low. This means that it's a low that was touched in 205 and back in the old cycle, back in 93, 94. Sorry. So, intuitively, we can say that from these levels, we should get a pullback. Hence, if we do get a pullback in the USD, you got to be very careful on the commodity complex side. You could see really massive rallies. So, let's see if we have some stocks to watch during expiry week, and yes, we do, as usual. On Monday, Kroger is announcing earnings. Tuesday, we have Goldman Sachs and Best Buy. Wednesday, General Mills, a stock we already followed here back in April. We had an option strategy that worked out very well. And what else do we have? We have Morgan Stanley, and we should have had Lehman, I think, on Wednesday, but they surprised everyone. They came out with their earnings during last week. So what else? Thursday we have Conagra, and finally FedEx. We also remember we had a strategy on FedEx back in April, and that worked out not as well as General Mills, but it worked out pretty well. So let's see, what do we have on the menu next time? For October's expiry, we'll look at our feedish indicators again. We'll check out the commodity complex. We're going to come up with some option strategies, and of course we'll look at the USD, where it's heading, because it's very crucial. That's all for this week, fellow traders. I just want to tell you that don't be afraid of volatility. You got to learn to love it. You got to learn to embrace it. Volatility is your friend. My name is Nicolas Meffet. See you next time.